2026, stablecoin market cap just broke past 310 billion. BlackRock's tokenized fund quietly hit 2.9 billion. You've probably seen both numbers scroll by, but nobody told you there are actually two sides of the exact same thing. Those USDTs or USDCs sitting in your wallet, it's also very likely just one small bolt in this giant new machine we need to talk about today. Bonjour, Cédric here. Everyone who watches this channel knows I've been in this market since 2017. 3 full bull and bear cycles. And every single time a new bull market is about to start, I try hard not to chase whatever is number one on the trending list. Because the thing sitting at number one is rarely the thing that actually makes the real money. So today I'm going to say something that might piss some people off, of course, but this cycle, 90% of people are going to get the main narrative completely wrong. It's not AI agents. It's not meme coins, and it's not the little party going on over in layer 2 land. The real engine has already started quietly turning. Most people just haven't bothered to look in that direction yet. So in the next few minutes, I'm going to lay out the exact judgment I've been tracking with real money over the past few years. The only reason I made this video is simple. By the time this narrative finally becomes the next hot topic and everyone starts FOMOing, you will already have your own framework instead of scrambling to catch up. So, to make things easy, let me put the conclusion right on the table first. The main narrative of the next bull market is traditional finance fully moving on-chain, stablecoins going global, real-world assets getting tokenized, and institutional-grade DeFi heading toward trillion-dollar scale. I know exactly what you are thinking right now. Cédric, that sounds boring as hell. Your narrative doesn't even have a sexy name. Yes, the first time I really understood this, I thought the same. My reaction was identical to yours. But hear me out. Last cycle, the star of the show was what? JPEGs, NFTs. This cycle, the star might be treasuries. You heard that right. And precisely because it has almost zero hype, almost nobody is competing with you for the chips. Every truly big opportunity looks like a joke at the beginning. So if you don't trust me, that's normal. Let's do a quick thought experiment now. Imagine you are a fund manager sitting at BlackRock headquarters, managing tens of billions of dollars. Are you going to chase a meme coin that got cut in half 3 days after launch? No way! In today's world, you are looking for something that can generate stable yield, settle in seconds, and still check every compliance box. Guess what they eventually found? On-chain treasuries. That's how institutions play. They never chase the noise. They chase businesses that can still be running 10 years from now. So yeah, that's boring because they are boring. I still remember 2017 crystal clear, you know. I was in Thailand and a friend called me from Singapore. He just threw his entire net worth into one ICO. I wasn't bullish at the time. Not because I was some genius. It was because I read 3 pages of the white paper and I realized there wasn't a single line of working code in it. Obviously that project went to zero and my friend never brings it up anymore. But yeah, you get it. That taught me one dumb but reliable method. Don't listen to how good the story sounds. First, check whether the thing can actually be used. Last year, I ran a personal test. I wanted to see if one of those institutional grade yield products was actually legit. I won't name the product, but what happened is I put in a small amount of my own money and watched the redemption process every single day. Turns out, the word compliant, institutional grade, stuff like that, it was just pure PR copy. When something actually went wrong, nobody was responsible. So it was an expensive lesson, but just because someone says it's institutional grade, it doesn't mean it's real institutions behind it. The opposite is true for the real players, the ones who never shout slogans and just quietly move capital, systems and licenses in the same direction. Those are the ones I've been watching these past few years. They are not riding a narrative. They are moving the core pieces of traditional finance onto the blockchain, one block at a time. I know that sentence sounds big, but I'll show you the facts in a second. Keep watching and you'll see why I'm willing to say it out loud. So you might be thinking, Cédric, do you actually believe what institutions say? Fair question. I don't believe what institutions say. I hate them. I'm full for decentralization. That's why I have a small hack to understand the institutions' true goals. I only believe where they put their money. The people treating decentralization is the future as a marketing gimmick, and the people actually moving treasuries onto the blockchain, they are usually not the same group. One group posts on Twitter, the other group files regulatory documents. I only watch this group. And I've been seeing a lot of evidences to support my thesis lately. First piece of evidence, it was the stablecoins. They stopped being just a trading tool, and that's a long time ago. Global stablecoin market cap has already broken 310 billion. What does that number mean? Think of it as the entire annual GDP of a mid-sized country, except this money is flowing on-chain 24 hours a day, every day of the year, inside exchanges, into the new pipes of global capital movement. That smooth, one-click cross-border transfer feeling that you are getting underneath it. This system is very likely what's running. Second piece of evidence. Real-world asset tokenization, RWA, are accelerating really hard. BlackRock's Build fund is already approaching 2.9 billion, and the total on-chain RWA market has broken past the 35 billion level. 35 billion, yeah, it still doesn't sound huge inside crypto, but don't forget what sits behind. Roughly 450 trillion of traditional assets, real estate, bonds, commodities, private credit. This is basically taking an entire ocean and scooping it onto the blockchain one spoonful at a time. It's slow, but nobody is stopping it. And third piece of evidence, and the one I think maybe is the most important, once institutional-grade DeFi actually matures, you get 24/7 trading, second-level settlement. That creates a self-reinforcing flywheel. Traditional finance settlement still often takes 1 or 2 business days, but the industry calls T+1, T+2. You send the money and then you sit there waiting a day or two just to confirm it arrived. In the internet age, that sounds like delivering packages by carrier pigeon. On-chain settlement is measured in seconds. This is rewriting the entire rulebook of the game. For more than a decade, Wall Street's old foxes kept calling crypto a scam. Then in the last 2 years, they quietly did 3 things. They launched tokenized funds, they applied for more tokenized product licenses, and they started moving their clearing systems onto the blockchain piece by piece, saying no with their mouth, while their bodies are extremely honest, their actions are talking for them. It's exactly like those people who, on January 2, they swear they are getting a gym membership, and that this time it's different, this time it's for real. Then by February, they are sitting in the corner, eating a triple cheeseburger. It's great, but actions are really what tells the truth. And yeah, on top of that, remember when I said I'll show you the facts in a second? Here it is. Just this year, the Deposit Trust and Clearing Corporation, the DTCC, the company famous for being boringly stable, they quietly started production environment testing of tokenized securities. The underlying assets, Russell 1000 stocks, and major ETFs. This isn't just some startup floating a rumor. This is the foundation layer of the entire US equity clearing system putting real work in. No press conference. They didn't do one. No hype. Not even a proper press release. That is what real institutional betting looks like. It's quiet. It's strong, and it's irreversible. This is the actual foundation that can support the entire market, not some narrative that gets forgotten after 1 quarter. Based on this judgment, my strategy right now is simple. Put the majority of my focus on the traditional finance moving on-chain narrative. I will then wait patiently for macro confirmation, of course, and use this framework to filter projects that actually have long-term value instead of chasing every hot trend every day. You have to see the big picture. Those 2 numbers I gave you at the beginning, 310 billion and 2.9 billion. I didn't ask you to remember them just for fun. I didn't tell them to you just for fun. Behind them is the same sentence. Money is already today quietly changing location. You can keep refreshing your screen for the next 10x meme story. Or you can take a look at this boring narrative that almost nobody wants to talk about. Both roads, they have people on them. I'm just telling you what I'm seeing. Follow the money and you'll see it too. If after watching this video your judgment on the next bull market is even a little clearer, that is the result I wanted most. Drop a comment and tell me. Do you think the main narrative of the next bull market will be AI, memes, or that it will be, as I see it, this boring institutional finance going on-chain that I talked about today? I read every single comment. If you found this video useful, hit like, subscribe, and turn on the notification bell because this cycle, we will walk it together and we will try to see it clearly. See you in the next one, guys.